Hello everyone, a very good morning. Welcome to Oliveboard. I am Anshul, your JAIIB mentor, and today we are starting with a whole new series which is the May 2025 JAIIB must solve questions for your examination. So in this series we'll be discussing all the MCQs from your Macmillan book from the RBWM paper. So these MCQs are very important. Apart from having the conceptual knowledge, you also should focus on practicing MCQs. It will improve your efficiency. It will give you an idea about the questions that are asked in the examination. Also, these are very important for your revision. So we'll be discussing all the MCQs module wise. Today we are having the module A. Module A of your paper has four chapters. Unit 1 is Retail Banking and Introduction, which talks about the basics of retail banking. What are the characteristics, the advantages, constraints, challenges, and future of retail banking. Then Unit 2, which discusses the role within the bank operations, the three important business models which are approached by banks, the strategic business unit, departmental approach, and the integrated approach. Then unit 3 is the applicability of retail banking concepts and the distinction between retail and corporate or the wholesale banking. So we have the types of business process structure, the horizontally organized, vertically organized, also the business approach, the segmented, geography based or classification. And the fourth unit talks about branch profitability. We have the concept of profit and profitability, then the three types of profit, the measures of profitability, ROA and ROE. So, module A has four chapters. Let us start with the MCQs. First, we have module A, unit 1, retail banking and introduction. So, here is the first question. Try to answer them. First question says advantages of retail banking include. Option A, risk is less as client base is large. Option B, income is relatively more as spread is more. Option C, stable model with less volatility. And option D, all of the above. So here we need to understand the meaning of retail banking, the characteristics of retail banking. So basically, the provision of banking products and services offered to the individual customers, typically for the non-entrepreneurial purposes. On the liability side and on the asset side, also third-party products are being offered. So retail banking and stable with less volatility as compared to corporate banking. Here I've also given you a brief description. So what are the advantages? Customer loyalty, attractive and wide interest spread. Since customers are too fragmented, there is less volatility as compared from the large corporates, and large number of clients can facilitate marketing, mass selling, and the ability. So we practice customer segmentation. We have the high net worth individuals to which we can sell third party products as well, other products and services. So these are the advantages. Correct answer is option D. Then next question, which of the following is not an advantage of retail banking? There are certain constraints or disadvantages of retail banking. So, which of the following is not an advantage? High cross selling potential, we have already seen because of mass customer segment. We can cross sell, upsell. Then, high customer loyalty is there, less volatility in business, or high default rates. Which of the following is not an advantage of retail banking? So, the correct answer here will be option D. High default rates is not an advantage. So, what are the challenges? Customer protection and pricing. In today's digital world, we need to protect the customers against frauds, identity theft. Inadequacy of the management information system can be another challenge because a large plethora of information because of the mass customer segment is available. So, we need to manage that information well. Then understanding of the KYC and anti-money laundering issues, managing risk. Different types of risks are there: market risk, credit risk, operational risk. We need to manage all of them. Then effects of the disruptive new technology. With more and more technology entering the market, old technology is becoming outdated, so the banks need to adopt the new technology. And continuing growth. All right. So out of these, option D, which says high default rates, is not an advantage. Then, which of the following is not part of retail banking? So, which products and services are offered by retail banking? We have already seen all the products that cater to the individual customers, the mass segment. So, savings, account, retail loans, remittance services, all of these on the asset and the liability side. So, which of the following is not one of them? Internet banking, mobile banking, providing term loans for the projects, or credit card facility. Out of these, which is not a part of retail banking? So the correct answer here will be option C, that is providing term loans for projects, because it is more on the wholesale or corporate banking. So what are the products and services offered? Services include savings and current accounts, mortgages, personal loans, debit, credit card, and certificates of deposit. Retail banks can be local community banks or the divisions of the large commercial banks. Fintech companies are also providing the same services, right? Like Google and Apple. Then retail banking services to the individuals in the general public, while corporate banking only to the small or large companies and the corporate body. So this is the difference between retail banking and wholesale or corporate banking. So the correct answer here will be option C. Moving on. After the outbreak of COVID-19, the future of retail banking will depend mainly on. This question will also give us an idea that will technology or digital banking completely take over the physical or traditional banking? So first let us answer this. Option A, branch banking. Option B, brick and mortar banking. Option C, digital banking. And option D, none of the above. So after the outbreak of the pandemic, the future of retail banking will depend mainly on digital banking. So many changes have happened in the banking space during the 2 years of the pandemic because of the restrictions, lockdowns, social distances, and digital ways have become the new norm, right? CEO and managers are also planning online meetings, remotely people are working. Similarly, the customers are also seeking the same in-branch experiences in their online interactions. So all of the banking services, they do not want to stand in long queues. They want anytime, anywhere banking services. They want to access their bank accounts, make remittances, credits and debits through their mobile apps. So these are the changes. After COVID-19, we are seeing a shift towards digital banking, but this will never mean that completely it will transition and the role of traditional branch banking will be zero. It will always remain important for that segment of the customers who prefer the human experience. All right. Next, we move on to the question: the proportion of housing loan in retail loan segment is more than. What is the proportion of housing loan in the retail loan segment? Option A 50%, option B 60%, option C 75%, or option D 45%. So the correct answer here is option A 50%. So the proportion of housing loan in retail loan segment is more than 50%. Next, we have the unit 2, which is retail banking role within the bank operations. Here, the first question says the business models followed by banks for retail banking are option A, the SBU approach, option B, departmental approach, option C, integrated approach, or option D, any of the above. Before we see the answer, let us just very quickly go through the three types. The strategic business unit aims at dividing the business on the lines of SBU. These are autonomous divisions. These are flexible enough as well as to exercise control. They need autonomy. So these are profit centers. These are profit centers. If a whole company is divided into different parts, then and each will be focusing on the goal which is given to them. Like, for example, any company ABC divides its works, let's say it's working in textile, right? So, shoes, one SBU for shoes, another SBU for, let's say, t-shirts, another SBU for any other segment. So, each of the SBU will focus on their own business, right? On their own business. Then, if we talk about the departmental approach, here profit units are not divided, but organization can be divided on the basis of functions. Functions that the various teams perform. For example, there will be a different department for accounting, a different department for marketing, finance, planning, etc. And then we have an integrated approach, which is usually adopted by the smaller businesses, right? So it is a combination of the two. In banks, the approach that is followed is any of the above. Any of the above, right? So the models and the processes depend upon the importance attached to retail banking space. If the banks they want, they can create a complete separate business unit or profit unit for the retail banking, or they can create just a department focusing on retail banking. So the models or the approaches which are followed are SBU, departmental approach, and the integrated approach. Here you should know the process model which is followed by the different banks. For example, SBU approach followed by the private banks and the foreign banks. Departmental approach mostly by the public sector banks, right? Next question. Foreign banks cited in the topic which entered in the retail banking activities when not able to achieve the business objectives. So, what was the decision of the foreign banks that entered very aggressively in the retail banking segment, but they could not gain profits? What did they do? Did they continue with their business in spite of not being profitable, or they completely moved out of the business, or they changed their focus with some strategic changes, or none of the above? So many foreign sector banks they aggressively entered with the retail banking segment, and it was their business objective. Why? Because foreign banks they do not go by positioning objective. They have their business goals. They go by customer, business, and profit targets, right? But when it is not profitable, they exit the retail banking segment. So this was the decision taken by the foreign sector banks. They moved out of the business, right? The classic example is BNP Paribas, which entered the retail banking space very aggressively during the late 1990s, but they found that it was not profitable segment, so they exited. Similarly, American Express Bank also came out with their credit card business after taking stock of its viability. And recently, Citibank has quit the retail business in India, and it has now been acquired by Axis Bank. All right, so the correct answer is option B. Next question. The suitability of a business model or approach of a bank depends upon what does the bank take into consideration while selecting the business model? The corporate strategy only, the business objectives only, the business mix only, or all of the above? We know that banks, they structure their retail banking models mainly on a positioning platform. So the correct answer is all of the above. Next, business models of retail banking are being drawn on various aspects. In this context, which of the following aspects is incorrect? So we need to read the statement, the question very carefully. If we just very quickly go through it and see that which of the following is correct, we'll mark the wrong answer. So here the question is asking us which of the following aspect is incorrect. So what does the business model of retail banking not depend on? The product, capacity, delivery channels, or technology? We know that the retail banking segment has multiple products, multiple customers, and multiple delivery channels. So product is there, delivery channels is there, and definitely retail banking depends on the latest technology, the digitization. So we can clearly say that the correct answer is option B. Capacity is not an aspect for the business model of retail banking. All right. Now we move on to the unit 3 of our module A, applicability of retail banking concept. The first question says implementation models followed by banks for retail banking include horizontally organized, vertically organized, predominantly vertically organized, or predominantly horizontally organized model. So if we take this as a scale, so on the two extremes, we have the horizontally organized and the vertically organized. Horizontally organized model is where there is no customer information integration. A separate model is used for each of the product. Vertical, however, means where there is a centralized customer and their customer information or database, and the customer information is shared between or among the different products. Then we have between two extremes the predominantly vertically organized and the predominantly horizontally organized. In the predominantly horizontally organized, for most of the products, there's a separate model which is used or separate processing is done, but some customer information integration is there. And in the predominantly vertically organized, for most of the products, common information is used, but for some products, separate processes will be there. So this is the scale which will make the concept clear to you. So accordingly, the correct answer is option D, 1, 2, 3, and 4. All of these are the implementation models which are used. And these models are given by the Boston Consulting Group that conducted a study on the retail banking processes and deduced four broadly defined process models. So these are the four models. Correct answer option D. Next, which one of the following ways the price structuring for the products and services is attempted by the banks? So these process models are used by the banks to decide on the product models, then on the pricing, then on the delivery. So here pricing involves standalone pricing for different products and services, special codes for the high value deposits, bundled pricing or holistic pricing based on the total relationship. So the price structuring for the products and services, which is followed by the banks, can be any of the above. Either the banks can use standalone pricing, which will be the horizontally organized, special codes for the high value, which will be the predominantly organized, or bundled pricing will be the vertically organized. So the banks develop the models for pricing and the products based on certain fundamental parameters like market dynamics, then risk participation, return expectations, tenor or duration, resource positioning, and so on. And again, they will dynamically change with the market dynamics. In addition, regulatory advices also influence the pricing model. All right, so the correct answer is option D. Next, which of the following is not included under the retail banking? This we have already seen, the different products and services which are offered in retail banking. So, which of the following is not included? Online banking is there, medium business is there, high net worth individuals is there. However, the corporate entities are not catered by retail banking segment, right? The corporate entities are not dealt or catered by the retail banking segment. Next, which one of the following norms is the backbone of retail banking income? Which one of the following forms is the backbone of the retail banking income? The liability products, asset products, treasury products, or both A and B? Backbone means which will get the maximum income for the bank so that they can sustain and continue their operations. It will be the asset products. Asset products. So there are multiple products including various types of deposits or accounts, credit and debit card, loans are also there, personal, auto, housing, insurance, mutual funds, multiple channels are also there, right? Though essentially retail asset and liability products continue the basic structure, the trend has also changed because of the emergence of third party products. But the backbone of the retail banking income comes from the asset products, the different types of loans which are offered. Next, under which category the sale of insurance products falls? Apart from the traditional retail liability and retail asset, banks are also offering the fee based products and services. These are the other products and services which we also term as para banking or the third party products. Third party products. For example, depository services, corporate agency for the life and non life insurance, bill payment services, payment gateway facility, wealth management, portfolio management, all of these services come under the third party products. So the banks are also involved in the mutual fund and insurance products. Okay, so the correct answer will be option C. Then we move on to the last chapter of our module A, which is branch profitability. Branch profitability. First question says, out of the following, which is the definition of profitability? Profitability is a measure of an organization's profit relative to its expenses. It compares how much profit a company makes compared with its overall revenue and costs. Profitability is a measure of efficiency and ultimately its success or failure, or option D, all of the above. So here you should be very clear about the difference between profit and profitability. Profit, in general terms, we refer it to as the money which is left after taking out the expenses. So the total revenue minus total expenditure will be our profit. If a company is making rupees 20,000, it is a total revenue, but it will also have to take some expenses, make some expenses like purchasing of raw material, paying of taxes, then paying the wages to its employees, right? So when all of these expenditures are deducted, let's say they come to rupees 15,000, then the remaining 5,000 will be the profit. However, profitability is more of a relative measure. It says that if I am making this profit of rupees 5,000, how much cost have I incurred to create this profit? If to make this 5,000 profit, I am paying cost of, let's say, 7,000, so it will not be profitable for my company. It will not be a profitable business if my costs are more than my revenue or my profit. All right, so profitability definition, all of the above are correct. It is a measurement of efficiency. It compares how much profit a company makes compared with the revenue and costs. And it is a relative measure, right? Relative measure. It tells us that organizations are more efficient, they will realize more profit as a percentage of its expenses. It is a measurement of efficiency. Ultimately, it's success or failure. We can also say it is the business's ability to produce a return on an investment based on its resources in comparison with an alternative investment. So, it is a relative measure of profitability. All right. So, the correct answer is option D. Next, out of the following, which one is not a measure of profit? So now we have already discussed profitability. Profit, however, means the money that a business can generate after accounting for all its expenses, total revenue minus total expenses. So there are different types of profits. The question says which one of the following is not a measure: gross profit, operating profit, netted profit, or net profit. By the time that you are giving me the answer, I will tell you a little brief. Gross profit is the first line or top line profitability. It is the total sales minus the cost of goods sold. Cost of goods sold will include the advertisement cost or the raw material cost. Then we have the second line of profit, which is the operating profit, which we calculate by deducting from the gross profit. From the gross profit, we subtract the operating expenses. The operating expenses, which are also known as SG and A. SG and A. These are the operating expenses, like the selling, general and administrative costs. Selling, general and administrative costs. And then we have the bottom line profitability, which is net profit. Net profit after taking into account all the expenses, including the taxes and the interest. So out of the operating profit, we will deduct the taxes plus the interest which is paid by the unit. All right. So we can say that out of the following, netted profit is not a measure. Netted profit is not a measure of profit. So make sure that you note these things down because this question is very important. What is the meaning of gross profit, operating profit, and net profit? Also, we have the profit margins: gross profit margin, operating profit margin, and the net profit margin. You can go through the videos in which we have discussed the whole syllabus. Everything in detail we have already covered. Next question. Which of the following statement is incorrect? Again, incorrect. Profit is an absolute amount, whereas profitability is a relative one. Profit is an absolute amount, profitability is an absolute amount, whereas, so the option A says profit is an absolute amount, whereas profitability is a relative one. Option B says profitability is an absolute amount, whereas profit is a relative one. Option C says profitability is a measure of efficiency of a company in relation to the size of the business, whereas profit is an absolute number determined by the amount of income or revenue above and beyond the costs of expenses. And option D says although a company can realize a profit, this does not necessarily mean that the company is profitable. So go through all of these statements very carefully and then answer which of the following is incorrect. Which of the following is incorrect? So the correct answer is option B. Profitability is not an absolute amount, it is actually the relative amount, and Profit is the absolute amount. These options already give us all the definitions, right? So if we make a comparison, profit is absolute, profitability is relative, profit is a quantifiable measure, while profitability is a qualitative measure. Profit tells us the in numbers the total revenue that is generated. Profitability tells us about the efficiency. So the incorrect option is option B. Next, increased staff productivity is one of the most important tool to increase branch profitability. All right, we are given a statement. Then, out of the following, which one is not true? Which one of the following is not true? Basically, which of the following is not an impact of increased staff productivity? Does it lead to reduce processing cost, or clearly defined expectations and scorecards, improved motivation and reward system? Technology alone is sufficient to increase the staff productivity? Very obviously, we know the correct answer. Basically, we are talking about the ways how which the banks can improve their efficiencies, and one of the ways staff productivity, because in addition to reducing the process cost, automation tools can also help improve staff productivity. It will enable the banks to handle more transactions and greater volumes with the same number of personnel. But productivity improvement is not dependent on technology alone. So the correct answer is option D, right? And the question asks us which of the following is not true, right? Other ways, some ways how we can improve the staff productivity: we can establish the performance management techniques like clearly defined expectations and scorecards. We can also provide reward systems, better training and supervision, like employee of the month could be a title given to the best employee. Then redefining the job roles, using more flexible work arrangements, providing mobility for the off-site work, outsourcing. All of these can be ways in which staff productivity can be improved. And that is all. We have discussed all the MCQs from your Macmillan book of the RBWM paper. If you want to practice more questions, mock tests from all the units, all the modules, you can join the JAIIB Super Elite plan, which is the all in one plan. Here you'll get live classes, mock tests, case studies, PDF notes that you can download, everything under one plan. So subscribe for the course now. Start with your preparation. The registration has already been completed and your exams will start very soon in the month of May. So make sure that you give 100% towards your preparation. That is all for today. Thank you so much. I will see you again tomorrow with the next module with more questions. So make sure that you watch all of these sessions, practice all of these questions. They will give you an idea about the chapters. You can download the PDF from the link which is given in the description box. Link to the course is also there. So thank you so much and all the best.